So guys, is the S&P 500 now going to start pulling back because of the Shmita, which was taking a break on this rally right here, and now is this forming this typical signal we have been talking about on the series, on the Shmita series, which you have the dead cat bounces coming over and over and over again until you hit that bottom eventually. So stay tuned, guys, because we're gonna talk about in today's part 8 Shmita market market crash update. In this case, it's been some time since my last update. I'm gonna tell you guys what to expect technically speaking, and also I'm gonna combine my previous indicators and strategies to determine when and how much are we close to that bottom or start of the crash in that case. So let's get started, guys. So hi guys, and welcome to Crypto Solutions, here to help you make the best decisions in cryptocurrency and in macroeconomy and technical analysis. So in today's in this case, S&P 500 technical analysis, and also going to cover the Nasdaq, Dow Jones, and DXY. We're going to combine each of those factors in that case, and we're going to just talk about the previous Shmita market crashes happening over and over again, and this one is not an exception in this case, and we're going to talk about that, guys. So guys, leave a like, comment, and share this YouTube video with your friends, guys, and also subscribe to my YouTube channel Crypto Solutions if you haven't subscribed yet, guys, and also click the bell notifications to stay ahead in the cryptocurrency market, and also stay ahead in the stock market using my cryptocurrency and stock technical analysis YouTube video, guys. And yes, let's get started, guys. Okay, so since my last video, guys, I mentioned I'm gonna put a clip very soon here, which I'm gonna show you that this movement happened exactly as predicted based on the confirmations, which I'm going to show you right now, guys. In summary, what has to happen for this movement to continue going higher using the Fibonacci retracement? So first it has to get above that golden pocket. Right now we're above there. In this case, let's say 2 to 4 weekly body candle closes above the 0.786 Fibonacci retracement, above this $4,133.16. And right now, guys, look at this. So you're seeing this is the weekly, so this is the line that has to be held. So you're seeing here one weekly body candle close, and then like a fake out to the downside. Here another weekly body candle close, the second one held, and now this is still holding as support and following through. So that's looking promising. So that's a good indication that this has a high chance so far, from what I'm seeing here, of continuation to the upside because of holding this 0.786 Fibonacci retracement. So guys, as you can see, it happened exactly as predicted. So I'm going to show you guys quickly what do I mean by this, okay? So before we cover this, okay, I do want to show you guys that the S&P 500 was forming this dead cat bounces over and over again, okay? So if you don't understand this, just follow me. It is very easy to follow, so just listen and pay attention in this case. So we're gonna put from this high to this low right here, okay? We're gonna put it it says just trading view in this case, okay, there. So I'm gonna, you know what I'm gonna do on the daily, so it can be easier to put this Fibonacci retracement in this case. So yes, I want to show you this of how this usually plays out, okay? So here, usually S&P 500 likes to do a lot of like dead cat bounces. What does that mean? Just in case, we have a pullback. Once we're done with the recent pullback, we usually like do an uptrend, like a pump to usually this yellow lines. And if you want to be technical, it is 0.618 and 0.65 Fibonacci retracement. So that's usually the target you're gonna get after the pump, okay? And after you reach that yellow line, if it gets rejected, and then let's say it loses this red line, which is technically speaking is 0.382, usually once it breaks this support, usually it will continue going to the downside like this, and it will create a lower low than this one. So it's like you have a low here, and once it gets rejected and closes below this red line, the horizontal red line, then usually you will see a lower low here. That is a dead cat bounce. So in traditional markets, it's usually on the 0.5. So it can be either going around those yellow lines, or it can be just using the 0.5. But technically speaking, as long as you already gone through that 0.5, that would be enough, okay? And that's where you have to watch out in that case. And so we have one dead cat bounce there, okay? And then if we extend it like this on this new low, you can see it again, pullback, bounce, again, those yellow lines, and then closing below the red line, new lower low here, okay? That's the second like dead cat bounce in that case. Again, if we extend this, we can use the Fibonacci tracer in this case from, let's see here, if this one counts, yeah, from here to here, can put it like this, and the same thing, guys. And we have another dead cat bounce here. You have boom, pullback, pump perfectly on that 0.5, close below the red line, another dead cat bounce. We have the third dead cat bounce there, okay? As you can see, this is a very repetitive pattern in that case. And usually, as long as it doesn't close above those yellow lines and another 0.786 Fibonacci trace, and you don't typically expect for more options. So that's the point of the strategy in that case. So this will be 3 dead cat bounces here. And here, once it gets this bounce over here, you can just, again, put the Fibonacci trace, and in this case, the new one, from here to here. The same thing. Just pull back, yellow lines, below the red line, another dead cat bounce. 4 dead cat bounces there, okay? So you can see there's 4, okay? And now I was mentioning here from my recent last last update here, guys. So you can see here, this is an interesting thing, because you can see here, guys, we have a pullback, bounce, yellow lines, and you can see the red line held support. That's why it didn't have that continuation to the downside. So as I mentioned, guys, this is pullback, red lines, yellow lines, pullback, hold that red line, more continuation, now reaching above the 0.786, which is usually the last confirmation before this continues going higher than this high. In this case, okay? Instead of the dead cat bounce, it will be like a live cat bounce because it will be to the other side, okay? That would be dead cat bounce on the bearish side, and like I just come up with that statement in that case, the alive bounce going above this one. So yeah, so we have a pullback, yellow lines, hold the red line, pump again, rejection again, 0.786. But above the yellow line, still remaining above the red line, and now hovering around all of this, and then eventually boom, confirmation and follow through. So usually that's the strategy, guys. If once the price starts getting above the 0.786, usually that's where you're gonna see that continuation to the upside, and that's what happened in that case. Exactly as predicted on the clips I already showed you guys there. And if you want to avoid all of this, how can you determine if this is going to go down or up? Because it's just like dancing around the lines. You just increase the time frame so it can be cleaner, okay? That's why I usually like to use weekly time frames, because it's easier to navigate. I mean, you can see it here. See, you don't have that much dancing around, kind of, but it's better because you can see down, up, rejection, wicks, support, rejection, boom, 1, 2, 3, boom, hold this as support, lose it, and then close above, support, 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 fake out, and follow through. And if this is still dancing around, then you can just put it to weekly and it's more clear. Boom, down, up, rejection, boom, support, rejection, rejection, fake out, rejection, close above, support, 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 follow through. Okay, so yeah, that's another way you can see this market in this case. And as you can see, guys, it did follow through, and now, but is it going to form new all-time highs? Well, the last Fibonacci retracement that this has to break in order for new all-time highs, it has to stay above the 0.76. So you can see from here, dump, pump, yellow lines, boom, very bullish to the upside here, and then close below, resistance, resistance, and resistance. And now this will be support, most likely here, this yellow line. So technically speaking, this is still bullish because it is still above the yellow lines. Once you start to see that those yellow lines lose support, that's where you're going to start turning bearish, because then it will do something like this. Next one 0.5, and if that gets broken, next one will be 0.382, and from there if it gets broken, then you know what's the story, guys. Like I already mentioned here, you're gonna see a continuation to the downside. So it will be a lower low from here using that strategy. Okay, so that would be what I'm expecting. So another like technical reason why this pumps, this is clearly a W pattern and continue to the upside. Technically speaking, you can put it from here to be very conservative and emit the target. Okay, so that was one of the reasons in that case. So yeah, and you can see here, this was a dead cat bounce. I'm going to show you guys quickly here. Okay, this is very beautiful. S&P 500 likes to do that like very beautifully, like dang. So look at that. So it was very beautiful. So from here to here again, you just from here to here again, pullback, pump, yellow lines, still held that red line, pump, yellow line rejection, close below the red line, dead cat bounce. So this happens, guys, in almost all the time frames. Okay, so that's why this is a very powerful strategy, and it's a very simple strategy once you know where to look for, which I'm showing you guys how to look for in that case. Usually most people, from what I have seen, at least technical analysis YouTubers don't show you that for some weird reason, at least most of them, because it's very important in that case. So we're going to the weekly here. Okay, so I do want to put some, I already made some notes here because I discovered some very interesting things here, guys. So I have noticed when you have a 2 monthly below the 21 simple moving average, it's a market crash. So I'm going to show you what that means. So I'm going to go to the 2 monthly time frame. Each candle is a 2 monthly in summary. So, and now we're going to put some moving averages. Okay, and usually I'm going to show you guys, once it closes below this light blue, closing a 2 monthly body candle close below, usually that's the market crash using this other strategy, because you can see here very clearly, once it is on a very big uptrend, you can see here we have support, blue line bounce, yellow line support all the way up here. Once it loses that yellow line, light blue is here to save the day. Boom, bounce, keep going, boom, support, keep going. This one wicked, but it didn't close a 2 monthly body candle close, which is different. Yes, you have a, because of the C dump event, of course, Black Swan event, but still wick and monthly body candle close above, and that's where you still had that continuation to the upside. Support again on the blue line, and now it seems like it's going to potentially hit there. From there, it's very important that it holds support, or else, yeah, which I'm expecting market crash in that case, because of the Shmita cycle and because of the 50-year Jubilee cycle. Okay, so both cycles in one, and numerology 2023 just to keep it very summarized. That's also another like very deep aspect to it, but just to keep it very summarized, it's a 2023 represents, if you ignore the zero, which is part of the numerology, 223. That backwards, that's the secret society of skull and bones in that case. So usually those numbers tied to that usually end up being not good in almost anything. Just to keep it summarized, guys, because we're mostly focused in this case on the charts, but I do want to point that out because that's very important also. But yeah, okay, so here you can see, I'm going to show you what, guys, once this breaks this blue line, okay? So you can see once it breaks that light blue line on 2 monthly, market crash. Close below here the so this was the dot-com bubble, close below the light blue line, market crash. This was the 2008 housing crisis, close below that light blue line, market crash. So you have very clear examples there of that being very effective. Let's see here, guys, and you can see even all the way to the dot-com bubble, you can see how beautifully, it's just very beautiful uptrend, just above support, yellow line support, support light blue line, support bounce, support bounce, support bounce, and all the way up to here, guys. That's like, dang, man, that's 20 years in an uptrend on the 2 monthly using the 8 simple moving average, which is the yellow line, and the 21 simple moving average, which is the light blue line. So that's why I'm saying that would be one of the first confirmations for the, if you know, for the market crash. Technically speaking, once it closes below that light blue, because it's very interesting, because once you close below that light blue line, oh wait, black swan events out of nowhere. It's like it's planned, guys. You already know this. So, and that's why I'm keeping an eye on this 2 monthly in that case, okay? And usually, from at least from the recent events, if let's say in the worst case scenario, let's say that this C dump event is gonna happen again, at least on the economic damage, let's say, okay? This was from here to here, 30% pullback, okay? Immediate pullback. If it's going to replicate that from here, let's just assume that would be from here to here, that would put you around here. 30% would be around here. That would be around $3,000 for the S&P 500, okay? That would be that would be my expectation if it were to replicate this. I don't have 100% confirmation if it's going to do the same, but what I do know is that if it was going to do that, then we can get a very similar effect, which is around here, 30% from here. That would be my expectation, okay? So, black swan event pullback immediately around 30%, okay? The worst case scenario, 12 monthly retest of the 21 SMA. What do I mean by this? So now we're going to the yearly. Now we're going very high time frame, guys. This is what I would assume most people don't look at in that case. But you can see here, okay, put in the simple moving averages. This each candle is 1 year. That's insane. Okay, so here, guys, usually looking at the past, you can see using the 1 year time frame here. This was the 1929 Great Depression, and you can see a lot of consolidation here. Yes, it's very drastic, but it's a 1 yearly, but this is very drastic. I mean, if you want to pull some numbers quickly here, you can see it here. From here, Great Depression, 86%. Oh my gosh. Dang. That's insane. And then from here to here, 59%. Wow. Okay. So So just follow this light blue line. So this is the 1 year time frame, okay? So we see here, boom, above the yellow line, support, 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 breakdown. Then it goes into that light blue. Fake out on a yearly, a fake out. That's insane. And then close above the yellow line, and then support, still squeezed in between this yellow line and light blue, but still, you know, it's just you're in that range. Then all the way up, fake out, and still that is a great support. That was the 2008 housing crisis. That support was the 2008 market housing crisis. Bounce out of that, and in the worst case scenario, using this strategy, then this will be the target. If it were to do a freaking pullback out of nowhere, a massive like wake to the downside, which at least this is exaggerated, okay? But I'm just using previous history, okay? I do not believe I do believe this is not going to do this, but it will be at $2,190.34. So that will mean a pullback from here to here. That would be 49% pullback. Oh my gosh. So yeah, I don't believe that's going to happen. That's very, very exaggerated. If that happens, I believe that almost all the markets will collapse. And yeah, I really believe that's not going to happen. Okay, I'm gonna put some averages here. I just want to see how long it takes for this light blue line to get retested. If we see a pattern here, last time was on 1945 here, and then here 29 years later, retest here. Okay, that's one there. If we go 29 years from here, oh no, okay, here 34 years it took, another retest on that. And let's see here, from here 28, no, okay, yeah, I just wanted to confirm just in case. So I just want to show you guys how I think about these things, so you can see a pattern on my mind of how I look at this. That's how I discover these things, just looking at the patterns, the time frame it takes, the time for each line to get retested. That's another very great strategy I have seen. Look at how much time it takes for, usually, let's say a yearly, to retest that yellow line. I mean, we can get some averages quickly here. I mean, look at this, okay? So we have from here, okay? We're gonna use this one from here, okay? So we have here 1949, and the retest came 1962. So that would be 13 years later. It then retests that yellow line as the worst case, not worst case, but as the longest. That's a lot, because you can see from here 1, 2, 3, 4. This one took 4 years to retest, and then the next year retested, and yeah, all of this got retested. Okay, so and then let's see here quickly, guys, so you can see what I mean here. And then from here to here, let's see how long it took for the next. Wait a second, did it retested that? Yes. Okay, wait, it did retest it. Okay, I'm gonna do it from here quickly, guys. I want to show you guys how. Let's see, and this one took, wow, 20 years to retest that yellow line. So okay, so it's not that easy to determine, at least for the yearly in this case. But you can do this on the 1 daily, 1 weekly. So it's a lot of research, but it definitely works. I can tell you that on Bitcoin and other assets like that, on cryptocurrencies, it does work. Here, let's see. So far, this yellow line hasn't been retested since 2012, at least until now, 11 years. So for now, there's no pattern, at least using the strategy for almost guarantee. But yeah, okay. So yeah, guys, that's what I'm mostly looking for, the S&P 500 in this case. And you can see that the red boxes, Shmita cycles, As usual, I already covered this, guys. You can go into my previous Shmita market crash series. I have been mentioning since 2021. Literally, it's been it's been some time now. It's like almost 2 years. So pullback after that red bots, another one, and here another one. So yeah, it's very interesting how that works. Okay, and it goes over and over and over again. Okay, so here, let's see here, and also 1, 2, and 3, 1. Okay, let's see here, guys. So I'm gonna put this here, there. Okay, so we're gonna go quickly to the 2 weekly and finishing on the S&P 500 in that case, but you can see the confluence there, guys. So technically speaking, until still bullish, technically speaking, still, I mean, fundamentally very bearish. And Shmita Rampage usually comes 1 year after the Shmita ends, and Shmita ended last year. So this year is the year we're supposed to see, more heavy pullback. That's the expectation, and that's what the chart says most of the times. Okay, this is what technically to expect, and that's what I'm seeing so far for the S&P 500, guys. And when can we expect new all-time highs if it were to happen? Okay, well, first, guys, this has to first regain the 0.786 Fibonacci tracing, so that would be $4,509.21. Closing, let's say at least 1 to 2, I would say two weekly body candle closes above here. It would be two weekly body candle closes above the 0.76, and that's where I'm expecting a new all-time high. Unless that happens, I'm expecting more downturn because of the fundamentals. Shmita, Jubilee, 50-year cycle also. Last 50 years was the gold standard getting removed, and we have the 2023 like numerology, very like skull and bones. So that's I said it on purpose like that, so the YouTube algorithm, just in case they censor that type of information, I just don't want to get this video suppressed in that case, but you know what I mean, guys. So so far that's what I'm seeing. Still losing this yellow line here on the 2 weekly. Usually it likes to keep this as an option, as you can see here. So we can see boom, support, fake out, support, breakdown, confirmation of resistance, fake out, and continue going to the downside. Okay, so this is starting to look not that good in that case, and that's what I'm seeing so far for the S&P 500, guys. And one more thing, also, you can use also the moving averages closing below this 8 simple moving moving average in the monthly time frame is not good, because it also has confluence with this, or if you're not tracing yellow line, so closing below that yellow line, the 8 simple moving average in the monthly time frame would not be also very good. And black swan events can happen like this, just very drastic. That's my expectation based on the fundamentals, and also the, like I mentioned, Shmita cycles, Jubilee cycles. So that would be from any time now to November, maybe maximum December. But I would expect at least by November we already had the big events, whatever it comes. It really doesn't matter that much, at least for the reasoning why. It's just, it's going to happen, whatever it is, it doesn't matter. What I know is that it has almost a guarantee it's going to happen. The situation itself is not easy to predict, so that's why I'm not going to tell you some, the most I expect. Just I want to be careful with my words here. So it would be potentially 2 things. It would be in other words, alien and invasion, fake alien invasion. That's just to keep it summarized. I can't explain why and all those details, but just the predictive programming, the Simpsons. You have the also, project Bluebeam and all those things. You can research and you're gonna know what I'm coming from here in this case, at least for that aspect. That would be one potential scenario. Another one can be a flooding event, a climate big event out of nowhere, because weather is also can be controlled. In summary, they can make Dubai rain once per week. They pay specific people to do that because it's a desert. And that type of technology was already before the 1980s. They were going to use that for war, and the lame excuse that they made was, okay, no, this is too drastic for war, but they can put nukes. And I'm not used to weather. I'm like, okay, yeah, totally doesn't make sense. So that would be my my prediction. In that case, it can be either two. But the main point of this is that this is going to pull back. That's the main point. That's what I really care about in this case, because whatever they put on the stage is going to be mostly not. It's planned, so it's gonna go when it's needed to go. So it's not something that can't be controlled. So that's why I don't even bother with that. Okay, but yeah, that's what I'm seeing so far for the S&P 500, guys. So now we're going to go to the Nasdaq. Okay, so the Nasdaq, we can use almost the same references, at least for the moving averages and all of that. In that case, on the Nasdaq. So the Nasdaq, guys. Okay, well, this will be one of the potential scenarios already outlined here. Okay, for the Nasdaq. But as you can see, Shmita cycles for the Nasdaq in that case likes to, yeah, you can see it very clearly. It's just pull back and then pull back. This didn't pull back in that case. That was mostly Japan affected, and then here pull back. Okay, Shmita is not guaranteed every single time, but it does happen most of the times. And I don't look for exceptions. I look for high chance probabilities. That's what matters. Everything is a decision. Anything can happen at any time. So that's why you have to choose the high probabilities if it's on your favor. In that case, it's a really profound subject. So in summary, that's how it works. And here, guys, this once it did 4 dead cat bounces, bottom. Here 3 dead cat bounces, bottom. Okay, you can look at my previous Shmita cycles, Shmita market crash updates, and I go into details about each dead cat bounce. But just to save time, that would be the amount of time. So usually it likes to find the bottom 4 dead cat bounces and 3 dead cat bounces in that case. Okay, so what that means is that we're gonna use that also here. Okay, we're gonna use it here. Okay, we're gonna go here. Okay, this was I manually draw that in that case. My at a later time in that case. Okay, so here, guys, so we're gonna see that cat bounces. Okay, so let's see here. Okay, again, the same thing with the Nasdaq. Okay, this can be counted as 2 dead cat bounces because you can see here. This one is very interesting because this one managed to go all the way to the above the yellow lines and also 0.76 Fibonacci retracements. And wait a second, guys. No, wait. This pullback, yellow line rejection, close below the red line, a slight lower low, but technically that's a dead cat bounce. Okay, and then it formed. This would be the second one, technically speaking. Here, you can see it here, and then again. Okay, just a second. There, pull back above the yellow lines, and you can see that found rejection on the 0.76 here, and then boom, below the red line, dead cat bounce. Second one there. Okay, boom. But I'm gonna count this as 1 because it's almost the same. Okay, technically it's 2, but at least for the dead cat bounce strategy for bottoms, this I will not count that, at least for that purpose of the bottom strategy. Okay, so here we have another one. We have here again, you got the pullback here, one, boom, pump, 0.5, close below the red line, dead cat bounce, boom. Okay, second one in that case. And now we're gonna go here. Let's see, have another one here. If we use this wick over here, you can see, let's see, have one yellow line and then red line, boom, that cat bounce. Okay, so that would be again fourth one in that case. And then using this one over here, let's use this one over here, even this one to some extent here. Let's use this one. Okay, again, just over and over again, boom, bounce, rejection, the golden pocket below the red line, dead cat bounce again. Dang, it's so predictable, guys. As you can see, it's easy to predict. Okay, and you can see the evidence there. It's very, very obvious, very obvious. And then from here, we're like 5 dead cat bounces already. Here, this is the daily. The dead cat bounces I counted is the weekly, but I do want to show you, boom. Yellow lines, red line, dead cat. It's funny because it's so predictable. It's just so predictable. And okay, and here, you know what? We're gonna go on the weekly. We're gonna count the weekly ones. Okay, I'm gonna go quick on this. So if we count the weekly ones, then okay, quickly here we see here from here to here, this will be one. We have one. Come on, okay. One here, quickly, guys. Okay, come on, boom, boom, pull back, and dead cat bounce. That's one. Okay, that's how I counted the previous like bottom dead cat bounces using the weekly. Okay, on the daily there's more dead cat bounces. Okay, but just we're gonna count the weekly. Okay, just to keep it, just to keep the number lower, for it to be easier to follow. We can follow it anyways, but the easier the better. Okay, so again, and then you see here, from here to here, another one, just boom, and then bounce 0.5, another that can bounce, that would be 2. If we extend the line over here, it's here, okay, and another one, just boom, boom, the yellow lines below the red line, another one. Okay, that's 3. We have 3 dead cat bounces there, and let's see. Okay, and beautiful. And then this one, we have a 4th one here. Let's see. Again, just over and over and over again. Boom, bounce, 0.5 here. Then below the red line, that cat bounce. Okay, 4 or 5th one along those lines. Okay, and now on this one, which is the actual one we have at this moment, we have pullback, bounce, rejection here, come back here, up 0.5, go above the yellow line, rejection 0.76, rejection, fake out, topped out here, another dead cat bounce here. And yeah, Nasdaq so far is performing well, very well in this case. So what do we have to see for the dead cat bounce confirmation? Well, at least for one of the first confirmations, closing below these yellow lines, and then closing below the 0.5, and the final confirmation below this red line. That would be boom, lower than this one. And I will give you a target to expect for a bounce, which would be this yellow lines here. Okay, this is the same I have been showing from here to here, but this one is on reverse. So this will be like from here to here. Okay, that's the mindset with that in that case. Okay, so you know what, I'm gonna adjust this line so we can, you know, put it more easier to follow in that case. So I will put it around here, just a moment here, guys. Okay, here and there. Let's put it like this, and boom, beautiful, and there. Okay, I'm gonna put it. Okay, this will be the, just to make it cleaner for the charts here, this would be my target in that case for the market crash. That would be around here. So this would be a massive dead cat bounce, and boom, having support here on that 0.618 and 0.65 Fibonacci tracing. So that would be around $9,569.84 and $9,295.97. Okay, again, $9,569.84 and $9,295.97. Okay, and again, this will happen once technically it loses this 0.32. That's where, technically speaking, you can expect that. But in my view on it, I'm gonna expect it anyways because of the, again, the fundamentals, Shmita, Jubilee, 2023, numerology, skull and bones, and you know, summary that in that case. So that would be expectation, and that would be also around this range, retesting this as support, this range, which also makes a lot of sense in that case. Okay, that would be also a potential bottom scenario in that case around here. And if that doesn't hold, guys, it's not very good, guys, because this can do something like this, go here, all the way here, this range. But, and percentage wise, from here to here, 34% around that range. Okay, worst case around that range here to 0.76 here, 44%. That would be around 30 to 44% would be the bottom pullback, because remember, this cannot crash too much or else the whole economy will almost collapse. Yeah, so that's why I'm not considering this very low targets. You know, they're there, but you know, that's what I'm seeing here, guys. Okay, for the Nasdaq, I'm just going to keep it like that because it's also very tied to the S&P 500 anyways. So almost the same as you can expect for the S&P 500 will be almost the same you can expect for the Nasdaq. For the Nasdaq, you can look at it more volatile. So it would be more, if you see, like for example, 2% move on the S&P 500, Nasdaq would be like, for example, 3 to 4% around those ranges. Okay, so it will really depend on the S&P 500 also. Okay, and yeah, let's go to the Dow Jones, guys, here. And here, Dow Jones. Let's see here, guys. Okay. So support, resistance, support, resistance, support, resistance, support. Break up of that white line and boom. Above the yellow lines, and then 0.5 here. Bounce. Retesting almost that white line and following through. Okay, so technically speaking, this is also bullish. Okay, out of the three, the Dow Jones is performing the worst right now because it's already below the yellow lines by a little bit. It's almost the same, but it's almost the same as the Nasdaq, but you can see it's already there. This is a lot of support. So let's see how this reacts. Again, Black Swan event, boom. That's my expectation. You already know this, guys. And again, this applies the same. That kept bounce over and over and over and over and over again. And here, yeah, holding that those yellow lines, that will be very important to hold. Or again, technically speaking, 0.5 here. So it will be, it has to hold in this case this $33,775.05, and then that doesn't hold, then next one 0.5 Fibonacci trace around $32,796.08. That doesn't hold, next one 0.382 Fibonacci trace and $31,817.12. And if that doesn't hold, most likely, almost a guarantee, based on what I have already showed you guys, that cap bounce would be a lower low than this one. So that would be from here to here, 15%, going lower, 22% here. Okay, so yeah, new all-time high is the same, has to go above that 0.76 Fibonacci tracing. The same for the Nasdaq, it has to go above that 0.76, regain that, and close at least, let's say, 2 to 4 weekly body candle closes in this case for the Dow Jones. Okay, that would be in this case, and that's where I'm expecting new all-time highs. Okay, but still I'm expecting lower targets. Okay, and wait, this look like inverse head and shoulders breakouts, supports, and follow through if it's going to do that. So inverse head and shoulders means that this would be, the target would be around here, would be here, guys. Okay, let's see, here to here, that's target. But yeah, that's what I'm seeing so far, guys. And for the Dow Jones mostly, this is almost the same, guys. So it's like Nasdaq, S&P 500, and Dow Jones, almost the same in regards for the time it has. The dead cat bounces, the bottom bit, because they move all together, guys. So in summary, mainly focus on my S&P 500 technical analysis I did today. It's almost the same on the Nasdaq and Dow Jones. The only difference would be like the percentage wise, Nasdaq will lose or gain more, or both, and the same for Dow Jones. The Dow Jones can lose more or gain more, both compared to the S&P 500 in that case, guys. So for the Nasdaq, I do want to mention in this case, technically speaking, regaining that 0.76 Fibonacci tracing will give you an all-time highs. If it closes 2 to 4 weekly body candle closes above the 0.76 Fibonacci tracing, that would be above $15,148.91, and that's where you're gonna expect that continuation, closing above that $15,148.91. That's my expectation, guys. And now we're going to the US dollar DXY. Okay, so DXY, very bullish. As you can see here, at least on the short term and midterm, you can see a bounce very beautifully like this. And that's why you're having that pullback for the overall market, at least a little bit, because market is still holding very, very strong. Fundamentally, it hasn't for a long time, but technically speaking, it has been holding very strong. You see this like this for the DXY. So this is looking like a triple bottom, kind of like 1, 2, and 3. Boom. Let's go to the 2 weekly so we can see more confluence here. So this is getting bullish, and that would mean this will be the target. Okay, and the DXY using the Fibonacci retracing strategy. Boom, pullback, bounce, reject on the red line, confirm this 0.236 retracing as support, and then next red line here. If it closes right here like this, like 1 to 2 weekly body candle closes above the 0.32 Fibonacci retracing, that would be around that would be above $105.11. This can swipe to this 0.5 Fibonacci retracing for next resistance, $106.89. If that gets above there, then golden pocket, and the maximum, at least so far from what I'm expecting, would be $111 right here. Okay, and this works in inverse, guys. If this goes high, investments go low. S&P 500, cryptocurrency, almost whatever investments. If this goes down, then investments appreciate. Okay, but long term, DXY is on a long-term downtrend. It's lower highs. Now, it tried to go above this range. Oh my gosh. Wow. So So technically speaking, this will be very bad if it goes above this range, because that will mean that it's going to start forming higher lows like this, like it's forming here and here. Still, $114 was the range here, but still pull back and then retested this blue line, which is this range. We have resistance here, resistance, break above, and confirm around that support. And if this is going to do something like this, that would be horrible for most investments in that case. But so far it has a long way to get there anyways, but I do want to point that out. Wow, because this is a macro Fibonacci transfer from here to here. Okay, red line here, and yeah, it's hovering around those lines. Let's see here. I want to put this on the 2 monthly to see how this behaves, if it's more smooth. Even with the 2 monthly, this is not that easy to track using Fibonacci retracements in this case. Okay, so but technically speaking, this did a dead cat bounce. Let's see, from what I'm seeing, yeah, you can see here pullback, rejection, very near those yellow lines, and then closing below the red line, dead cat bounce. And now that would be one dead cat bounce, but that's on the macro, guys. That's very insane because it comes back all the way from 1985 to 1992 here. Movement, yeah, it took a lot of years. Okay, so yeah, we're finishing here, guys. So okay, wow, very interesting what I'm seeing here, guys. Let's see on the weekly here. So this is looking bullish in this case, so I would expect at least a retest on the 0.5 Fibonacci tracing on the short term here. You know what, midterm, because this is 2 weekly, so that would be around $106.89, and then I would expect to find a lot of resistance here on the 0.618 and the 0.65 Fibonacci tracing. $108 and $109. Okay, so that will be $108.78 and $109.20. And if this wants to get kind of very bullish, then next one would be 0.76 Fibonacci trace and $111.33. And if it closes above that with multiple two weekly body candle closes, okay, two weekly body candle closes above the 0.76 Fibonacci retracing, above this above $111.33, then that means that this is going to do it a live cat bounce strategy. And that if that happens, which that would be very insane, but that would make sense if this market crash is very insane also. If the market crash is insane, then this is going to also be insane. So but my ultimate target, guys, if I'm not putting so much emphasis on this, but this would be like the worst case scenario, I will expect a rejection on that macro 0.618 and 0.65 Fibonacci tracing. That would be around $119.20 to around $122.48. So, but I would expect at least $119.20 in the worst case scenario. Okay, guys? Not saying it's gonna happen. We can see this and then rejection on this macro 0.5 Fibonacci tracing, and then from there keep going lower. But yeah, guys, that's what I'm seeing so far for the XY, guys. In the short term, more upside around that 0.5 and 0.618 and 0.65 Fibonacci tracing. That would be between that will be in between $106 with 80. That will be in between $106.89 to all the way up around $108.70 to around that $109.20. That will be my range to expect. Okay, and yeah, from there it will depend. Again, each of the support and resistances I mentioned in all of this video, and also on the S&P 500, Nasdaq 100, the Dow Jones, and the DXY, each support and resistance has to at least close two weekly body candle closes on each support or resistance, or both of both, to break it. In that case, on each one, either to the downside or to the upside. A quick example: if this is going to close, let's say on this line, two weekly body candle closes above, then expect more upside. If it's coming back from a rejection like this, and then if it closes two weekly and if it closes two weekly body candle closes below this line, then lose of the support. So that's how I usually confirm either if the support is getting broken or the resistance is getting broken. This is not a 100% guarantee, at least for each level, but that's the closest we can get, okay? At least for this chart, and with a 85% chance. Just to put some averages there, based on what I have seen in that case, guys. So yeah, guys, that's what I'm seeing so far for the overall macroeconomy in this case, for the S&P 500, the Nasdaq 100, the Dow Jones, and the DXY. Okay, guys. So thank you so much for watching this YouTube video, guys. I really appreciate it. Thank you so much for your support. If you leave a like, comment, and share this YouTube video with your friends. Also subscribe to my YouTube channel, Crypto Solutions, if you haven't subscribed yet, guys. And also click the bell notifications to stay ahead in the cryptocurrency market using my cryptocurrency, and also other macroeconomy is a stock technical analysis YouTube video, guys. And also, guys, if you need help in the cryptocurrency market, had any questions, investing in short-term, mid-term, and long-term, I have an elite VIP crypto investor membership, which I cover 2 to 3 times per week. Technical analysis on various cryptocurrencies. It can be Bitcoin, XRP, Ethereum, Chainlink. It can be HETS, it can be Binance, it can be Quant, ISO 222 tokens, it can be IOTA, XLM, etc. And I also post it's like a signals kind of thing, but it's more towards me showing you what I'm doing in this case, which is trading in the short term and mid term. I put on trading opportunities, which I'm going to show you right now, which are right here when you're seeing the midterm personal trading opportunities. Like this, I update you guys on my trading opportunities and when I'm looking to buy or take profits or sell. Also, when I'm doing dollar cost averaging, I also notify when I'm buying and selling which specific cryptocurrencies. This is not financial advice. But this can be used as educational, investigation, and also entertainment. So, and also, if you have any specific questions about if this cryptocurrency is good, what about this one? Will it be in the future? What will be the most likely outcomes? Things like that. I can definitely help you with that. I also take into consideration the total solar eclipses, the total lunar eclipses, the Shmita cycles, and other very, very important indicators which I personally use to determine near bottoms and near tops in the bear markets and bull markets for the Bitcoin price. So yeah, if you need help, you can definitely click in the Patreon link in the description below. Patreon.com/cryptosolutions, and that's how it works usually. Like, I have the $50 per month in this case crypto portfolio investment review, but that will be just one payment, so it will not be a per month basis. It will be just one verification. So if you're interested, you can definitely click on my Patreon link in the description below, Crypto Solutions. It will be patreon.com/cryptosolutions, and I will see you guys there. I really appreciate it, guys, and I will help you as much as possible. I will see you right now there, guys. Have a nice day, guys, and take care, guys. Thank you so much for watching this YouTube video, guys. Have a nice day, guys. Take care, guys, and peace out, guys.